a slice. Got to roll the dice, that's why all my life I've been grinding all my life. Look, all my life, been grinding all my life. Sacrifice, hustle paid the price. Want a slice, got to roll the dice, that's why all my life I've been grinding all my life.
How's it going, everyone? Thursday, here we are. It was a good, it was an average day on the market, actually. I think it ended down, but we got a bit to speak about. We got some news from the ASX, but first and foremost, we've got Josh Day from Profit Invest, so we'll probably bring him in straight away, and we're just going to run through some stocks that he's been looking at, some stocks that are of interest to him and to pay a little bit of attention to. So we might bring him in now and give it a bit of a discussion. Josh, how's it going? Can you hear me?
Hey mate, yeah, all good.
Sweet. So you got a few stocks to talk about?
Yeah, mate, probably just start off with a bit about myself. So one of my first investments was when I was just fresh-faced 18, obviously just a little bit older than that now, but first investment was the reject shop right back in the day. I brought that bad boy at about $7.60. I think I only had $500 worth, and I think I made myself $300 and sold out, and I was pretty over the moon. You know,
Nice.
as you would be, just made $300, and yeah, it was over the moon. So then, I mean, I pretty much straight away went out. I put another $2,000 or so into the market then, because I was pretty high at the time. Of course, I thought, oh yeah, if I can make $300 from 500, imagine what I could do with $2,000. So I put $2,000 in and brought myself some Santos stocks.
Yep.
And within 3 months, I lost 50% of my investment in Santos, and it took nearly 4 years to recover. I think I got into Santos with like $8, and it dropped to a low of like $2.80, and then it took nearly 4 years to come back. And
Bloody hell.
yeah, I learnt pretty quickly. I mean, at the time, I pretty much went straight to Google and just typed good stocks to buy, and they sort of came up and didn't really do too much about it. Looked at their PE and thought, oh yeah, this bad boy's pretty good.
Yep.
And went about my ways and had one good one, 3 bad ones, and then I decided that I better do a bit more research into this, and it wasn't all just easy money.
Yeah.
So yeah, from there, I think I brought Slater Gordon was another good one.
Oh.
I think I pumped a little bit into that and lost one of the worst trade deals in history, lost 96%. I turned $550 into about $3.80. So that was a good learning lesson as well, and thought, oh yeah, better really have a bit more of a look here. And then from there, I sort of did a bit of research and developed a little bit of a criteria around what I would invest in. So those were namely stocks with high earnings, growing earnings, and little to no debt were really companies that I liked at the time, and still do continue to invest in companies with traits such as that. A couple of examples of those were like Altium International. I think I got those fellas around the $4.80 or $6 mark or something like that, and now I've held them ever since, never sold, and sitting on a pretty juicy gain with those bad boys, and they've still got no debt, and they still continue to grow their earnings every year greater than 20%, sometimes even upwards of 30%, you know.
Yeah.
Another good one was well, Afterpay. Everyone owns a bit of Afterpay, but I think I got
It's
in
one of
pretty
those
early
classic
on that.
stonks. Everyone's
Yeah.
got to have one of those stonks.
Yeah, I think I got in pretty early on that one. I think I got it. I must have been one of the first people to buy it at $1.80. I didn't know anything about the
Shit.
company, but the girlfriend at the time, she said, "Oh, I love shopping, and have you seen this Afterpay stuff?" I said, "Oh, that's fantastic. Where do I get me some of this Afterpay?" And it
Yeah.
was actually listed, and it turned out to be all right. And then from there, sticking with the traditions of high earnings growth, little to no debt, brought into Magellan Financial Group at around $22, $24 or something like that. And I only recently sold out of them probably a year ago. I think I sold out at about 58 something bucks. And then one of my all-time favourites is old Jumbo Interactive.
Yep.
Obviously has through pretty turbulent times lately, as a lot of things have, but probably Jumbo a lot more so than a lot of other things.
Yeah, from a
and
high of 27 down to, what is it now, about 11, 12 bucks?
Yeah, it was pretty hard to watch. I think it got down to as low as like $6 or something like that. So, I mean, I was pretty well protected with Jumbo. Once again, buying quite low. I think I brought it $2 or $1 or something, you know.
Yeah,
So
I think I picked it up at about 270.
Yeah, and one of the beautiful things about Jumbo's been is they pay. Well, at the time they paid a 2.5% dividend. They've grown their dividend nearly every year since, and mate, the original $500 I put in turned into like over 10 grand, and was paying me something ridiculous in dividends.
Yep.
And you know, like that was probably the power of compounding money,
Yep.
I suppose. But mate, there's been a lot of poor decisions in there as well throughout the times. We don't speak about those. We only speak about the winners.
Well, as long as that's the beauty of going long on stocks, is that, you know, your upside is infinite theoretically, and you can always make more than 100%. Whereas your downside is capped at 100%. So you only really have to have a handful of winners. Even, you know, if you got a full portfolio of maybe 10 to 15 stocks, you could have 10 losers. But if you got 5 of those that are pulling 500% gains, then it all pans out pretty well.
Yeah, that's exactly right, mate. Yeah, a couple of like this coronavirus thing at the moment. It's hovering around, and some dude had a bit of tasty bat soup, and everyone's lost billions of dollars. So I hope it was one of the world's tastiest bat soups for his sake.
That bat soup was a multi-trillion-dollar soup.
Yeah. Yeah, but
Bloody hell.
mate, there's a few lessons from what's happened before, like especially looking back in the like the last financial crisis we had and the one before that. There's a couple of signs that we can look out for, and it's not all doom and gloom. I think it's I mean, over the 12-month period following October 2008, the market fell about 40%, just due to the US credit bubble and CDOs, if anyone knows what they are.
Yep. The old debt obligations.
Yeah, but one of the big lessons was the people who sold, most of them sold at the bottom. You know, like most people sold at the bottom. They got scared, and you know they decided not to touch shares again. It's too risky. But had most of those people held on from 2008, most of them would be sitting on a nice chunk of profits right now. So it's not all doom and gloom, and it's all about spending time in the market, and rather than trying to pick an entry and exit point and
Yep.
shoot somewhere in the middle and sell in 2 days' time because it didn't do its thing,
Yeah.
even though you've got a good thesis backing it, I suppose.
Well, I guess for a lot of people our age and ones that are a bit younger, this is probably ours and their first real experience of a stock market crash. And if anything, it's, this is a lesson as to how quickly the market can bounce back. And if you're someone who wants to try to sell out of their positions as the market's beginning to tank, and somehow guess a point of the bottom to get back in and make your money back, you can quite easily miss the bottom. We saw how quickly it bounced from 30-something% down to where we're 12 or so percent down. So just how quickly the market can bounce back, you can't really time the market, and that's why a lot of the time it's holding your positions and often trying to add to your quality positions as the market is falling.
Yeah, that's exactly right. A couple of updates, I suppose, from the Profit Invest team as well.
Yep.
Obviously, we're still working most days to try and find some good investments out there, and we do our research occasionally and find something good pops up, and we try and write about it on our website. One of the latest ones that's popped up has been Boeing company, something that we really like. It was a bit hard to swallow when old mate the goat came out the other day and said he's sold all these airlines, but I've got a thesis
he's trying to manipulate the market, mate. He sold out of his positions, and now he's trying to make it tank so he can pick them up at dirt cheap.
Yeah, that's how he makes so much. I was reading one of his books the other day. I read a version of his 2010 annual report. He had $32 billion of securities at that stage, and I thought, it'd be interesting to pick up the 2018 version of this. In those 7 years, he's now got $90 billion worth of securities. What a beast. So obviously he knows what he's doing, but wish we could all be a bit more like him.
Yeah, that's for sure. So so Boeing, tell me a bit more about that, mate. What's the thought process behind that, the forward outlook that you're sort of anticipating?
Yeah, well, mate, Boeing is arguably the world's largest aerospace manufacturer in the world. It's US based,
yep,
which has great advantages. Air Force One is a Boeing jet modified. The US isn't going to want to fly around in Chinese aircraft, that's for sure. Especially when they can manufacture onshore. It's something that's going to continue to be manufactured in America. There's a couple of incidents that have plagued Boeing lately, mainly the 737 MAX incidents. I think it was Lion Air and some Filipino Air or something like that. Obviously, they've had some issues with their control mechanisms, and the whole fleet of 737 MAXs have been suspended since middle of last year, which actually didn't cause too much of a impact to their stock price. If anything, the stock price actually went up from there, which was quite surprising. A couple of other notes going back in previous recession periods or periods of poor performance of the overall market, Boeing's had swings of up to 60%. we're currently seeing a swing of around 77% fall from the peak of $391. And it's seen a low of $90, currently trading around the $120 mark. So if you picked up some shares at the moment, back to the high of 391, you could probably see a return of potentially 223%. I don't think that it's going to get anywhere close to that anytime soon. However, Boeing had already, prior to the corona, Boeing had already cut their aircraft manufacture from about 800 planes per year down to about 170 due to the 737 MAX incident. So the levels that we're seeing were already reflected. Like Boeing would normally manufacture 800 aircraft in a year. Due to the 737 MAX, it's going to only manufacture 130 or so last year, and experts are predicting aircraft manufacture to fall between 30 and 40%. However, that's keeping in mind Airbus and Boeing are the only two between them make up 91% of global aircraft manufacture, and Airbus is still manufacturing around 900 aircraft per year. So in my opinion, a lot of the falls will actually come from the Airbus rather than the Boeing, because Boeing's already operating on a reduced level of manufacture. I actually think Boeing's will increase manufacture even during the corona. They flagged in their Q1 report released, I think, to the market last week, that they were on track to manufacture 168 777s alone, and then about a similar amount of the 737 MAXs. So that right there is already double the production of last year's. So I think that that's obviously better than last year's. Obviously not going to do a huge thing, anything huge to the result. But I'm still predicting that revenue should be still around $80 billion, obviously made up of a reduced share. Previously in 2018, revenue from commercial was $60 billion, and I'm sort of predicting that production's not quite half of that, so 40%. I think we could expect about $80 billion in revenue. If you equate that to roughly what their share price was doing in 2018, we could probably expect a reasonable return of about $268 per share, which would be 121%. Keeping in mind the 52-week low of Boeing has been $89 a share, which would represent a potential loss of about 26%, which would be a worst case scenario. I would suggest setting a stop loss at. But obviously, see the risk being a lot lower than the reward here. Potentially good gains to be made. Boeing do a lot of work. About half of Boeing's work is for defence contracts. I don't see any reason for defence contracts with Boeing to be reduced or suspended for any reason due to the corona. If anything, will probably continue remaining quite constant as they have in previous years, as well as they also do a international service business, which is mainly aircraft maintenance and all the likes of that. I expect to remain quite constant as well, even if there's no new aircraft in the sky. So
do you expect that the defence portion, the defence segment of their business will grow over the next few years and potentially make up that hit on the commercial side of things? I saw the news on their Australian military Boeing drone Loyal Wingman aircraft, and that looks pretty promising. as a new push in the business. So, are we expecting to see, that making up a portion of the commercial shortfall?
Uh, yes, a portion. I don't think overall defence contracts to Boeing will increase substantially this year, unless obviously tensions decide to flare up between whoever and America. I think defence earnings will stay reasonably considerable because at the moment their defence contracts are about $30 billion a year, and it's just a little drop in the ocean for this sort of thing to sort of affect the overall stockpile of their jets. And another thing is it's a US company. Boeing is a hallmark of America. America's got their jets, and it's not going anywhere anytime soon. So I think it's a good buy and hold for the long term, and essentially might see some volatility in the short term, and before it starts to stabilise out. Yeah.
That sounds good. So what's the next play that you've got on your radar?
The next play would probably be EML, so EML Payments Limited. So currently trading at $3.20 a share. They've had a 52-week low of $1.20 and a 52-week high of $5.70. So represents 80% upside and 80% downtime to the download to the 52-week low. So it's somewhere in the middle now. I was fortunate enough to pick some up a little while ago in the early $2 mark. So sitting on a little bit of a profit at the moment, which is always nice. But I also think there's definite upside in the share price here. They just closed a deal with Ireland's largest fintech, PFS Financial. So that will really serve to diversify their existing customer base, which is currently more gift cards, which is honestly being greatly affected. Their earnings and revenue from that has pretty much dropped to zero as of current. However, they also are quite heavily involved in fleet cards and salary packaging cards. So I think there's actually going to be, you'll see an uptick in this as more people switch from cash to card. And they also have a significant business in gambling and online sports betting. So if you see the sports bet cards or anything like that, that's all issued by EML. And the way they'll make money out of that is they'll charge a fee to the bookies, and then any money left over on the card will have probably a 12-month expiry date on that. So if you don't spend all your money on the card, EML ends up getting that money because it's expired. Right now, they're sitting on $100 million in cash alone for a $1.1 billion company. That's cash in the bank is making up 10%, which is quite considerable. The PFS acquisition should pretty much in the short term should nearly double the earnings of the company. I think from memory, the earnings of PFS were about 24 million and EML were about 24 million. However, due to the mall sector, which makes up 50% of EML's payments, I expect a earnings miss on that side of the fence. But PFS acquisition probably couldn't have came at a better time because they've signed like government cards with in the UK. So UK healthcare will all use PFS cards. So I expect that to actually fill the earnings void there until the mall gift card sector actually recovers there. So yeah, that's probably another good play.
And I see they've got once again $0 debt. So meeting your criteria of no debt or very little debt. So their balance sheet is in a really good position, that's for sure.
Yeah, not like Boeing's, mate. $25 billion of debt.
What a contrast.
Yeah.
No, but
Yeah,
definitely
very
it's good that EML made that acquisition with, getting into the government space at this point in time. If any sector is definitely a safe haven for revenue at the moment, it's going to be government. So that will sort of de-risk their earnings a bit for the short term, but long term, bit of a growth play. So very nice.
No, definitely.
So your third one, what's the third and final?
Oh, the third and final. I didn't even finish getting this third and final one out. It's pretty new in the books, but
Yep.
mate, I'd heavily recommend Alcidian Group at the moment. So what Alcidian Group does, it's a digital platform for hospitals. So at the moment, you'll go to a hospital and you'll see charts at the end of the bed, and doctors will scribble on them, and the nurses won't understand what the scribble on the doctor's chart is, or no one else will understand it because the doctor's writing code and you'll never know what they write. So what it does is it's an app that digitalizes that. It also helps patient flows. So it's like a ward system, so I can tell you which patients are potentially at risk, and you can really help with the ward rotations on there. It also has a number of AI features built in. So when a patient presents with some sort of potential, I mean, I'm not a medical expert here, but when a patient presents with a contrasting, I forget the word, but it's like a sign or a symptom, the AI on there asks a series of questions, and it can actually detect, say, a low blood sugar or something, which might actually usually be overlooked. So it's saving lives because it's picking up stuff that potentially the doctors and nurses would have missed prior to this. Like one of the biggest cause of injury of death at a hospital is actually the mistreatment of patients in the hospital and the incorrect administration of drugs and incorrect care whilst in care is actually one of the leading causes of death in the US, if not the world. So anything that can help assist medical professionals take care of their patients is obviously a bonus. So currently trading at 16 cents a share, 52-week high of 30 cents a share. So obviously it's 100% upside from here. I predict that it can actually do a lot more than this over the medium term. Over the short term, I expect to see it up around the 30 cents again.
Yep.
Currently $153 million market cap, and just have to pull it up, but it's right at the cusp of a cash flow positive business. So they had one quarter last year, Q3, positive cash flow. Cash burn has really been negligible, if not small negative numbers, like negative $1 million a year sort of thing. So nothing that's outrageous. They have about $20 million cash in the bank. So they're not going to do any capital raising soon, in my opinion, unless there's a really good acquisition case for them. But they've got $20 million cash in the bank, and right now they're pretty much controlling their spend and sitting on a negligible cash burn at the moment. If not, it's actually really controllable. They've got long-winded contracts. So out to 2025, they've got $46 million per se in contracted value to be realised between 2020 and 2025. So they've already sold that. That's cash in the it's nearly as good as cash in the bank. They've just got to earn it.
Yep.
And the system's already implemented, so there's not a huge cost over the lifetime to actually earn that money. So their efforts between now and 2025 can be spent focusing, building new contracts, improving the system and the likes. And the beauty of hospitals is all the contracts are really long term. Once you're in there, you're not going to go away because there's so many people who depend on the stability of the system and will refuse to learn a new system. So it's very sticky revenue per se, Alcidion. So got very high hopes for them. They're expanding they have expanded to the UK. I expect that sector to continue growing even faster than Australia's sector. I think there's something like 50 times as many beds in the UK or something like that when compared to Australia. So obviously a lot more opportunity as well.
Yep. And
they continue winning contracts in Australia. Queensland Health, New South Wales Health, they're quite big in ACT and Tasmania. So I expect that to continue growing as more and more people start to use the system. It's like that network effect where if you've used it, you'll go to your next hospital and you'll want it implemented if they don't already have it, so it's really that network effect that would build upon there.
Yep. Yeah, I see a lot of similarities between Alcidion and Pro Medicus. If you've heard of Pro Medicus with their medical software that they offer, and I guess Alcidion to me looks like Pro Medicus was, 4 or 5 years ago, and the share, wasn't doing a hell of a lot. I mean, it was moving up and down, pretty volatile, but only in the last probably 2 years, Pro Medicus just really gained traction and shot up from $10 up to a high of nearly 30. And I guess these sort of tech medical companies have that advantage of being highly scalable at very low additional costs, because once you've got the software, it's just a case of getting it out to the masses and deploying it. So yeah, I was just looking at Alcidion's revenue. So it's gone from 2018, it was like 3.4 million or so, and just in the last year it's up to around nearly 18 million. So a huge amount of growth, and it's in those numbers when you're talking about 18 million, we're talking low numbers in the big scheme of things. Like 18 million can quite easily become 180 million because it's not a massive number. So yeah, there's plenty of potential in it. And do you think this current situation that we're experiencing with the Rona will sort of push that digitization within the healthcare space?
Yeah, definitely. I mean, Boris Johnson, the Prime Minister of the UK, he got the Rona. He fully lived through the hospital system. Arguably it could have saved his life. We don't know how sick he was. He looks pretty poor most days, like he's probably the world's ugliest bloke.
Why you got to do Boris like that? I tell you, bloody ScoMo, poor bloke looks like he's just about lost all his hair over the last 6 months.
Yeah, take your pick, him, Trump, or Boris. I don't know who you choose. Probably Trump, he's got the most money. But yeah, Boris Johnson has he's gone through the hospital system just recently, UK Health. Potentially the hospital that he was at, I'm just shooting for the stars here, had Alcidion software. I know they do have their software running in a number of markets in the UK and have rolled out in UK hospitals. But, I mean, he's going to be asking questions, how can I devote funding to these hospitals? They just saved my life. And why wouldn't you? You know, like, he's really seen the value of hospitals and the medical field. So I think he's going to invest heavily in UK hospitals for the foreseeable future. And you know, that may not be digital health, but there's going to be a lot of, if there's funding, there'll be a lot of it thrown out, and that will be included in there somewhere. Someone along the lines will say, well, look, we need better digital health, which it's quite evident here in Australia. You go to the hospital and everything's on boards and whiteboards and charts. Alcidion's got a smartphone app. You can pull out your iPhone or your iPad and you can just tick off your patient and gets added to the queue. You know, it's much better than paper. You know, like you can actually read what the doctors want on there, and with the AI systems in there, it's just going to continue getting better and better. So the more data that the AI is fed through the app, the better the AI will get at recognising any of the symptoms. And it's just going to continue improving. There should be in the future 0 deaths, accidental deaths whilst under primary care is really the vision, because there's no excuse for it. Well, when there's, you know, like there's human error, and humans will always be on the front line of this, but the work that humans do should also be checked by AI in the future, which will happen. There's no reason for it not to.
Yep, definitely. Righto, mate. Well, is that all three that you wanted to share with us?
Mate, you got a bonus one tonight.
Oh, a bonus!
Let's pull out the extra special one for you.
Yeah, we got lucky with Alcidion, eh?
Yeah, but that's about all I've got, mate, for tonight. Thanks for having me on.
No, it's all good, mate. Thanks for joining us, and appreciate hearing your 3 picks that are of interest at the moment. And where can everyone find you on Profit Invest if you want to do a shameless plug?
Yeah, just jump on Profit Invest. We've got a website. We've got a Facebook page, I think, which is linked. And then we're working on something pretty special at the moment too, which is like an advanced portfolio tracker. So right now in the Australian market, there's probably only one solution to tracking your portfolio, which I'm not going to say its name because it's absolutely ridiculously priced at about $40 a month. You know, like, yep. I don't know about you, but a lot of investors, especially novice investors, won't be making, you know, don't have $40 a month to get started. Everyone deserves to track their portfolio, and it should be free, really. The data's out there. So we're going to try and make that happen for the people on there and just keep an eye out for it in the coming weeks.
Sounds awesome. Well, we'll look forward to it. Righto, mate.
Thank you, mate.
Thanks for joining us again, and we'll catch you again soon, hopefully.
Thanks for having me, mate. Bye
No
now.
worries, mate. Bye. Righto, so that was Josh Day from Profit Invest. Awesome chat, awesome picks that we should be paying attention to. So I'll probably just go through a quick summary of some of the Australian market news from today and what we might expect from the US market tonight and what I'll be watching on the US market tonight. So jumping across to the AFR, there was a hell of a lot of news out today, and I won't go through it all. The point of tonight's live stream was mostly with Josh, so it will just be a quick summary of some of the key ones from today. Just scrolling through. We had Morgan Stanley come out. They're saying the rally in Afterpay's share price is justified, given their citing of customer payment terms, app downloads in the US, and longer term potential from a Tencent partnership that we saw recently. The broker has increased the price target from $19 to $36, which is pretty high. I'm just gonna have a look what the current price. Yeah, current price $39.50. So that was interesting to see. It's good to see some of the analysts giving that acknowledgement to Afterpay. A lot of analysts sort of quite dismissive of Afterpay and its future growth. I mean, I have to full disclaimer that I hold Afterpay in my portfolio, but I think it has massive growth potential ahead of it in the US market, and the 10% equity stake, or not equity, was it equity? They 10% taken, I think it was 5% stake in Afterpay. That's pretty massive to see that. But other news, we had some PMI come out, nothing major. Bingo, Morgan made a downgrade on Bingo. I hold Bingo in the portfolio, but yeah, Morgan's cut its price target on Bingo after making material downgrades to its forecast, with the company set to experience a tough trading environment. The broker retained its hold rating on the stock, but reduced its price target from $2.81 to $2.29. We now expect the full year 2020 EBITDA of $150 million, with a 23% EBITDA decline in financial year of 2021, with strong double-digit recovery growth in subsequent years. I have a long-term outlook on Bingo, so I mean, this sort of news. A lot of these downgrades and guidance has been pulled is because of the coronavirus and the current situation. So if you have a long-term outlook, it shouldn't really be too much of a worry. Flight Centre sells Melbourne HQ for $62 million, which they bought for $32 million back in 2008. But yeah, the Australian TPG Vodafone merger got approval by FIRB, which is like the Australian review board for any foreign acquisitions or mergers or whatever. They have to be approved by FIRB, and at the moment the government set the assessment criteria down to $0. So basically any acquisition or merger or anything of that nature has to be assessed and approved by FIRB before going ahead, due to the current situation. I think they'll probably, ASX ended down 0.4% today. And I'll probably should jump onto Twitter and what profile I'm in here, go to Earnings Whisper and see who we got reporting tonight on the US market. So before market, Tiva, AB InBev, we might be checking that one out. Not too much going on in that before market though. After market will be interesting. We got Roku, which if you don't know, Roku, it's that like free TV service, but they make most of their monetization through advertisements on it, and I think they do have like a premium version of it as well that you subscribe to, and I think Roku has said that they've had a fairly good uptake recently due to the coronavirus. So that'll be interesting to see how Roku reports. Uber, that'll be a really interesting one. We had Lyft report this morning, and it was a bit of a surprise. Also, if you haven't added me on Twitter yet and you've got Twitter, go to the Market Unpacked on Twitter. I try to post any of these earnings, updates of interest, notable sort of companies. So I posted this morning, Lyft. So yeah, Lyft EPS, loss of $1.31 they reported versus a loss of $1.62 estimate. I even got that wrong. No, I did. No, I got that right. Yeah, so they missed on that. Revenue of 956 million reported versus 893 million estimate. So they beat on that one. It was really interesting. They said that they actually had more rides during this time, in the last few months this year compared to this time last year, which is crazy. I mean, who is catching Lyfts and Ubers at the moment? I thought everyone's meant to stay at home, so super confused by that. Lyft is very US situated and centric, so maybe they're benefiting from the US having more relaxed, protocol on the whole situation. But I'm not really expecting Uber to do as well as Lyft, given that Uber is basically global at this point. They're in the top 2 of the biggest ride-sharing companies in almost every country. I think that they're going to get really hit. I think London is their biggest market, and it's going to be affected quite dramatically. So I'll be watching Uber, and I'll probably chuck it on Twitter and update on the Facebook page as to how they go. I might try to make a trade on it, but we'll see what happens. Dropbox will probably be watching that one. If anyone follows Stock Market Live on YouTube, he's really, really interesting. He makes some really insightful plays. He's an options trader, and I think he was pretty bullish on stamps.com. So I might be paying attention to that tonight as well. But those are the ones that I'll be watching on the US market tonight. And we'll have a quick look at, what am I looking for here? Indices, US 500. So we're trading up at the moment, up 1.3%, which is nice. US market up. So I made a couple of plays the other night as well. If you want me to go through those, if you're in the private Discord group, I updated those guys on the plays. They were Wayfair and Skyworks. I was just trading some CFDs on those ones. Pretty high risk, but it ended up paying off. So if you guys are interested in me going through some of my CFD trades, they're not as regular as some people. It might only be every couple of weeks or every few weeks, but if you're interested in me going through those, join the Discord private group. I always keep those guys updated on everything. They pretty much get the latest as to what's happening in the portfolio, any of the trades, before I even make them usually. And let me know if you're interested anyway, because I'll probably do some short videos on it. I might even do a video dedicated to CFDs if it gets enough interest. But anyway, guys, I think that'll do it for tonight. Most of tonight's live stream was to go through Josh Day's stock picks from Profit Invest. which was really interesting. Really enjoyed that. So thanks to Josh again. Thanks to everyone for joining the live stream tonight, and probably catch you next week. So cheers, guys. See you in the next one. Bye.